The week ahead, another relatively busy week. Obviously, it's the end of the month and a month which has really seen markets go rather sideways. In terms of the focal points for next week, we have testimony from Mr. Powell to both houses, both parts of Congress, which will be above all instructive in terms of the economic outlook and indeed what he thinks in terms of winding down the Fed's balance sheet. We'll have plenty more thoughts from the ECB, and here in the UK, obviously there will be a particular focus on the debate in Parliament on Wednesday about the current state of play on Brexit. Whether that actually delivers any sort of resolution to the current impasse that we have is a completely different question. In terms of statistics, the focal points for the week are likely to be the Eurozone and Japanese CPI data, both likely to be well below their respective targets. In the Eurozone, we're probably looking at something like 1.4% in terms of headline CPI, and core CPI not much further from 1.1% that it was last time. In Japan, headline and core CPI likely to be a country mile away, even on the core measures, say around about 0.8 from the BOJ's 2% target. That emphasizes the point that even if the Fed is on a pause at the moment, the ECB and the BOJ are at the moment finding themselves challenged in terms of trying to get away from their extreme monetary accommodation. In terms of statistics, the end of the week, obviously, we have the various manufacturing PMIs from around the world. Judging by the flash PMIs that we had out of Japan, Eurozone and the US, they are unlikely to offer us much in the way of comfort. In the US, we have the combined advance and preliminary estimate of GDP. This could be a bit of a nasty surprise in the sense that the market is forecasting 2.5% for Q4. Despite the very weak retail sales numbers that we've had and the weak durables numbers, which implies a rather slow pace of business investment. The market is predicting 2.5%, but the Atlanta Fed GDP now measure is down at 1.4, and that probably emphasizes which side of those risks there are. There is quite a lot of other catch-up in terms of US data to get through. We have things like durable, the factory goods orders, and indeed we have more home sales data. But overall, the other focal point for the week in terms of the US likely to be consumer confidence. If that takes another fall, then people will be expecting further weakness in retail spending numbers. At the end of the week also in the US, we have personal income and PCE data. That is for December rather than for January, it should be emphasized. And elsewhere, we also have the gamut of inflation indicators in the national CPI readings for Germany, France, Spain, and Italy.